Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 15th of March. I've seen some really good action this week where all of the main support and resistance levels that we set for the major currencies and the indices held up really well. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and a really good example of when a market really finds resistance at a certain point, how quickly it can react and actually get back down to a level where we would fully expect it would find support. So you can see it obviously had a really big move up, but it struggled around that 66 sort of 20 area to hold up there. A couple of very big wicks at the start of the week, and we saw a big drop down here and a touch of the 20 and 50 moving average, which is a very standard pullback move. You'd be pretty happy with that move, really. Look, it's not only the moving averages that are holding it here, you've also got all this support right through here. You can see this was what was effectively 2 weeks worth of very heavy wick action that was finding support at this level right here, and then actually just shooting up to the 66 and basically reversing again. So no real surprises here that it actually found a little bit of support. It's kicked off a little bit now just towards the end here, but again, it's one of those ones where, you could really see it coming because it was struggling through this area, and obviously the take profit would have been hit. Now, look, you go to a 15-minute chart or even a 1-hour chart and you're going to see the reactions. It was a very solid drop throughout the last previous session, but once it actually broke through below that 66-cent mark, that's where you were really in. Once you got a couple of these closes, you were really set for a pretty reasonable trade. The 1 hour, same deal here. It was starting to trend lower. You can see that we've got lower highs and lower lows forming, albeit shallow ones. They were still lower high and lower lows. And once it did break through there, once it was in, you were done. You weren't. There was no really getting back in it once it actually did break that 66-cent mark. And we're only talking about 50 pips, or even 40 pips really. But still, it's a really good move and a scalp for what we're trying to achieve, because the take profit is clearly there. And the good thing about that, of course, was it didn't require a very big stop loss. So once it did break through there on the smaller time frame, knowing that it has been struggling, it was a pretty good trade. So hopefully you were able to catch some of that action. Over to the US dollar CAD, and it had a reasonable bounce off the support where we knew, well, obviously there's good support here. We've seen that plenty of times before, so no real surprise that it has bounced off this level. It bounced off quite aggressively though. It did do a very big bounce throughout this session. Even if you go to the smaller time frames, you're going to probably struggle to get in on this one. Once it did the breakthrough, it basically sailed off into the sunset for about 7 or 8 candles straight. So if you weren't in on the first break, you were probably going to miss out on it. Once it did, in my mind, we knew there was support there. And once the candles broke through and broke past the moving averages, especially this one, once this one was done at around that sort of 134.90 area, that was the opportunity to get in. Look, where it's going and where it could get to, basically, as long as it closes above the moving averages, there's still a little bit longer to go in today's trading session. So, realistically, it needs to hold up along here. But if we can close above these moving averages, I think, for the next 24 hours or so, or early into next week, if we're trading in this zone, I could see it sort of gravitate to the 135.50 area relatively smoothly. There is a little bit of resistance where it is now. So, these were the previous peaks that we were talking about that we were struggling to get through. But if we do get a continuation through here and we're trading above the moving averages today or early into next week, I think that we could probably continue on to the 135. So any pullback to a smaller time frame moving average, and we're looking good from there. Of course, if it pulls back below the 20 moving averages again, I'd just be looking at trading it back down to the support. I wouldn't be looking any shorter than the current support until it does eventually break through. So we'll move over to the US dollar yen now, and this did exactly what we wanted it to do as well. It bounced off at that 146.50 level really nicely, and basically up straight into the resistance at 148.50. So pretty good trading on that one. Look, if you go to the 1 hour, you're going to see all the things that you needed to do. Obviously, it started to round bottom, which is what we like to do at support. That 146.50, pretty straightforward. Once we've got the lightning bolt, the low, the higher low, and then the higher high, trading above the moving averages, we were off. So really from 137, probably 40 onwards, you could have caught this one. Pretty good trade. All of these little mini pullbacks were okay to get in if you missed that initial burst. And really, it's not far away from reaching its target. It's one of those ones where it's still trending up higher, pretty good move. I expect that we're probably going to find a little bit of resistance at this point, though. We know it's been resistance in the past. Obviously, very, very strong support here and resistance there. So with the moving average bearing down on it and obviously resistance from the previous support levels, we probably find a little bit of resistance at 148.50. It doesn't mean that it's going to stop it, and it's certainly not an uptrend yet, hasn't reversed the uptrend, but in saying that it hasn't actually formed a proper long-term downtrend either on the daily. So, for that to happen, it's got to obviously make a new low. And then we've got the lightning bolt that we're after. So it's still a little bit away from that. It may well just be the pullback up to this level where it starts to turn around. So I'd be looking for signs at around this level. If we're going to break above the 148.50 and it's trading above the moving averages, pretty easy decision. Then we're just looking at moves up higher to around that 150 again. But if it reverses at this point and we start to see a series of lower highs and lower lows, then we'd be looking a move back to the 146.50. So really be guided by the smaller time frames. Now, it's done its job in terms of where it needs to get to, just a little bit short of it at this stage, but any start of a rollover at this point here, and we'll be looking at moves back to that 146.50 in the first instance. All right, over to the dollar index. Dollar index again. This is what I said earlier in the piece. Yeah, all the things we needed to do, or these currencies to do, have done it, and the dollar index is no exception. You can see we had a big move up, basically all but reaching the 103.50 is the target that we're going for. The moving averages are all there. Again, very, very heavy resistance at 103.50. So it's very similar to the dollar index in the sense of what we're looking for here. We need it to either break through the moving averages, and then we're looking at a move back up to the 104.20, or it rolls over at this point here and continues the downtrend. This unlike the previous CAD the yen, is in a downtrend. We've got the high, the low, the lower high, and we've also got a lower low. So this may well be a continuation of that lower low if it fails to break these moving averages. If we get a rollover here and it starts to trend down, the first target I'd be going for is the 102.50, but then we are obviously in a downtrend, but there is probably support there. So there's about 100 points on the dollar index that you'd be looking for. But if we get a break above the moving averages, however, and it gets above all this resistance, then we're looking at moving back to the 104.20. The euro, of course, is the one that gets affected by that. Again, it is in a longer-term trend. We've got a higher high and higher low sequence on the daily chart, which is no mucking around. It got to the 109.50 pretty comfortably. Has sold off now down to that sort of 108.80 area, which is pretty strong. You can see we've got resistance right through there. So no real surprises that it would find a bit of support at this level. The 20 moving average is obviously there as well, but this could be just a parking spot on it for a continuation on the way up. So just be really mindful of that. Where it moves from here, I'm happy to trade both ways. If we do break the 20 moving average, I'm conscious that there is reasonable support at 108.50, which is only about 35 pips away. Okay, so just be careful of that. If we see a little bit of a reversal here, we start to see a series of higher highs and higher lows on a 15-minute or a 1 hour, I'd be looking for a move back up to the 109.50, and a potential break past there would see it at 110 pretty comfortably. So very important zones for reversal here. They're either going to continue on or they're going to break through, but they are very, very pivotal moves that you really want to be keeping an eye on. Any sign of a reversal from these levels or a continuation, I think can be traded quite comfortably. I like those sorts of days because it means that whatever it does, there's going to be an opportunity to actually get in and would get a reasonable move out of it. So definitely the ones that we like to look at. All right. On to the US 500. And look here, this has just been basically a stagnant week of not much. It's tried to break to a new high, hasn't done so. It's hovered around this level here. It's hasn't pulled back to the 20 moving average yet. Its counterparts, the NASDAQ and the Russell 2000 have certainly been weaker in the last session. They're definitely weaker than what the S&P has been. 51.50 is an important zone for it, but really not much to report here. If you want to scalp it, set the high at the 51.80 and the low at the 20 moving average, which is around that sort of 51, and probably play inside that until we get a daily close above either. If we get a daily close below the 20 moving average in the next couple of sessions, then we're going to start looking probably reasonable weakness early next week and probably for the whole of the week. But if we do stay in this zone, just until we do get a daily break outside of that, basically 5,200 and 5,100, I would be only playing inside that zone and look for scalping opportunities, with the targets being both sides of that little basically built up zone until we get a daily close. And just that's probably the easiest way to play that one. All right, thanks everyone for joining me. I hope you've had a great week's trading. We've seen some pretty good opportunities. Hopefully you're able to catch some of those. Have a good weekend. I look forward to seeing you all next week.